Oh man, these markets are super volatile. Like I said before we headed into October, October is known as the most volatile month for stocks, and it's been nothing short of that. Let's take a recap of what's happened since Monday. We sat here on Thursday, halfway through the market opening, and Monday we came out of the blocks and the market was red. A lot of fears in the market, which we covered on the channel, and the market was not having it. I posted a video saying I was buying some of my favorites on the dip. I bought Matterport, Lemonade, Enphase, a little bit more of my favorite stocks, Palantir, and we then had Tuesday where the market turned green, and we were giving ourselves a pat on the back because we bought a good dip and we're like, oh, that's a bit easy. That we turned around pretty quickly. We only had about a 5% correction in the S&P. What's going on here? Well, Wednesday then opened and the market dipped straight back down again. And we're like, here we go. So that was just the first layer of the cheesecake, right? We're going to get a bigger dip now. But then yesterday, something happened after I posted my video, which then flipped the market, and the S&P and the major indices ended up green on the day. And what happened was Senator Mitch McConnell gave a lifeline to Congress around ensuring we don't get a government shutdown. So, by way of a recap, you'll remember one of the biggest things weighing on the markets right now is this looming threat due to the political bickering around a shutdown of the US government. And what this means is the US government, and Janet Yellen, the secretary, has said if we don't resolve this by the 18th of October, the US could default on their payments for the first time in history, and that could mean that government would have to go into shutdown, okay? They won't be able to pay their bills and they would have to go into shutdown. They would default on payments and their credit rating would take a hit. This would be a catastrophe, to put this into perspective, guys. But the markets don't expect this to happen, right? It's not going to happen, but it's just annoying that these politicians are not resolving this issue, but instead they're waiting and playing a waiting game till the final hour. So that was unnecessary. But yesterday, halfway through the market open, Mitch McConnell came out and offered a short-term suspension proposal to the Democrats, which would allow the government to keep trading until December at some point. So he's bought them an extra 60 or so days to resolve their differences. So this is not the final solution, but it's just something in the way to ease some of the tensions. And that's why you're seeing the market now respond a little bit better. So let's take a look here. You can see there was Monday, the red candlestick on SPY. We then had a better Tuesday. This started off negative. You saw we wicked down here and then ended back just slightly positive on SPY. And then today we've gapped up and we've had a good strong day. So let's take a look at the major indices. We can see at the time of recording, we've got the S&P up 1.48%. You've got the Dow up 1.55 and NASDAQ up 1.69. These are really nice big jumps in the indices and just signs that the market is having a positive response to what's going on. Now, let's take a look at the few of the individuals. We've seen tech and reopening plays doing pretty well. Twitter up, Nvidia up, General Motors was up, Costco was up. But let's also take a look at my watch list here and see what we can point out. So 6% up for both Ehang and Peloton. Interesting that Peloton is up. NIO up 6% as well. I think people are starting to come around to the fact that some of these Chinese stocks have taken an absolute beating, and maybe there's some hidden yield available here which people can rotate towards. Matterport doing really well, another big position of mine, doing really well, up 6%. Affirm up 4%, Snapchat 5%, Monday.com 5%, Ford up 5%, Enphase up, just broadly up. Nice green market today. You'd have to be doing something pretty wrong to be in the red. Speaking of which, let's sort this in the red. Let's see what's taken a hit. And let's see, so we can see a few of the Bitcoin plays have kind of cooled off, I would say, from yesterday. They were absolutely running yesterday. Bitcoin still holding strong. And a few of these Bitcoin plays, BTCM, Mara, SOS, all to the downside slightly. American Airlines is flat. Everything else is absolutely green. It's a buoyant market, and in no short thanks to Mitch McConnell giving a bit of a suspension on the debt ceiling trouble around the shutdown. So there's some of your favorite shorts. You can see Lemonade is also up 3%. You've got Twitter, which I mentioned, 4%. ChargePoint doing well at 4%. Redfin up 3.8%. And then your kind of AMD chip plays, Nvidia, AMD are doing pretty well. up 3%. Dropbox 2.8%. Yep, that was Nvidia. We mentioned it. Snowflake, a good SaaS play, up 3%. Your traditional plays such as Walgreens Boots Alliance up 2%. So it looks like the market is buying this dip for the meantime, and you can see that's what's going on here. Let's also take a look at the VIX, which is our volatility index, to give us an idea of what's going on. And you can see a massive gap down in volatility, guys. You can see that red candle there. Let me just remove my EMA ribbon. You can see this big gap down in volatility, really cooling down. I mean, from this high here, which was just about 2 weeks ago when we were really concerned, you can see we've had a good 30% drop in the VIX. Okay, so just an idea that the market's kind of cooling down and just kind of retaking stock of where we're at. And I think markets are starting to feel a bit more comfortable. You know, the Evergrande crisis is kind of cooling down. They've seen this debt ceiling issue having half a resolution, but they know they're not really they shouldn't really allow this to prolong for too much longer. The market was worried about tapering, but again, they're not so concerned now because they know tapering is going to come and we're kind of used to it. And then this one concern around inflation, right? So the inflation one is the one that pretty much still lingers, but people know what to expect with inflation. Now, the other positive news, which is helping markets today, was weekly jobless figures. So weekly jobless figures came in today for the previous week, and they came in at 326,000 unemployment claims. Okay, that was less, which means it beat the estimate of 345,000. So this is a really good beat, and it was 364,000 the week before. So a 40,000 swing almost in less jobless claims. Okay, less unemployment claims in the week. Now, this is partly due to the enhanced benefits coming to an end, and more people then therefore have an incentive to go and find work. Okay, so that's a good indication, and the market is also waiting very eagerly for tomorrow's non-farm payrolls. Okay, so we're going to receive the non-farm payrolls for September. And remember why this is so important. This is important because Jerome Powell, in his previous statement, has said that he's waiting for a moderately strong jobs figure to give him the green light to go ahead and taper. Okay, so we're getting the jobless figure tomorrow. We've got CPI on the 13th next week. And then Jerome Powell has all the data he needs to convene on the 2nd and 3rd of November to make his decision around tapering. The market is pretty much expecting tapering to be announced either in November or December, and a taper timeline towards the mid of September. Now, even though we're expecting job figures to come in strongly, if they don't, and taper then becomes off the cards, right? If you get a really spectacularly weak jobs figure, then tapering could be off the cards, and we could see stocks rally, right? But tomorrow, the rule is if tapering is going to be introduced, you see a little bit of rotation out of stocks, and your yields would climb somewhat. But will we see that? I think because a lot of it is telegraphed and the markets have priced a lot of it in, I wouldn't be surprised, even if we see a strong jobs report tomorrow, which triggers an announcement for tapering, I wouldn't be surprised if markets don't overly react, right? I wouldn't expect a massive dip. Having said that, it could depend on a whole different bunch of different macroeconomic factors tomorrow and political things which could come up tomorrow as well. So that's pretty much the state of affairs in terms of where we're at in the market. I think if we were to compare where we're at now compared to some of the videos we were making just over a month ago, I think the market's in good shape. I think if you look at the fears we've had, I'm probably forgetting some, but you've had Evergrande fears, you've had the fear of tapering, you had the debt ceiling concerns, you've got the fears of stagflation. I think a lot of these are starting to get addressed now. We're seeing the debt ceiling issue come to an end. We're seeing tapering get closer and closer, and less people are panicked. They've kind of seen that process and they're less stressed about it. And the Evergrande issue seems to be subsiding, although we don't know. The only other factor which is kind of there but not quite in the foreground in terms of US thinking is the energy crisis. And here in the UK, we can feel that a lot more. And it's just wondering whether that contagion spreads to Europe and then the United States, because this is all being led by supply chain shortages, which we know on the chip and car side, chip manufacturing and semiconductor space. The US have felt that, but they're yet to feel that yet on the energy side. So will they feel that in the coming weeks? That's something we'll have to wait and see about. But in terms of the existing kind of worries and apprehension in the market, a lot of those are getting ticked off. And I think that's why we're seeing, not sustained dips. We're not seeing massive growth, but we're not seeing sustained dips. And, some people are saying we could expect a 10-15% correction in the S&P. We got a 5% correction and we've just kind of bounced it back. So the market's not in a mood to dip very heavily right now, and that's just a sign that everyone's quite comfortable being in equities right now. And equities are the only asset class that are actually providing real returns right now. You're looking at your bonds or you're looking at any other asset classes, you're not getting a real return. So I think investors know that they need to be in equities, and then there's just a debate of which type of value plays you want to be in, right? I think you're seeing more appetite for the value plays versus high growth, high EPS companies. And that's natural, right? When you're in an uncertain environment, when you're in an environment where you have fears of persistent inflation and threats of interest rates increasing, naturally you're going to want to rotate away from high growth companies into more value plays with higher cash on balance sheet. Right, so there you have it, guys. Hope you guys found that useful. If you like this type of video on the macro markets and where we're heading in general, then please don't forget to hit the like button and subscribe, and I'll see you in the next one.